Hey everybody, this is Alan Moore, Certified Financial Planner and founder of Serenity Financial Consulting. Thanks for joining me. So if you haven't gotten one already, you'll probably be receiving a notice from your bank about some changes that are happening to FDIC insurance at the end of the year. I got mine about a week ago, and let's just say it was less than helpful in actually explaining what the changes are and how they affect me. So prior to October 2008, you may remember what was happening around that time, Lehman Brothers going bankrupt, the market falling, sky falling, that sort of thing. You had $250,000 of FDIC insurance on your bank deposit. So if your bank failed, went bankrupt, essentially you were protected up to that amount. Well, in October 2008, one law was passed, and then it got extended by the Dodd-Frank Act. That basically took that $250,000 cap away and made it unlimited. So all of your deposits would be protected. They simply did this to keep us from all going and taking all of our cash out of the bank, which would have caused a bank run, which would have caused more banks to fail. So at the end of this year, at the end of this month, all of the unlimited protection is going away. We're going back to the $250,000 protection. So what does this mean? FDIC insurance provides $250,000 of protection per ownership category per bank. So if you have $250,000 in an individually held savings account and $250,000 in a joint checking account, you have $500,000 of protection because you have money in an individual account and money in a joint account. If for instance, though, you have $500,000 in an individually held savings account, you only have $250,000 of protection. Because again, you only have $250,000 per ownership category. So what are these ownership categories? Well, the FDIC outlines 8 of them. The most important ones to you are individually held, joint held, certain retirement accounts. You can get them through corporations such as LLC, S Corp, that sort of thing. So those are really the ones that will probably affect you. One important note is that joint accounts actually have $500,000 of protection because each person on the joint account gets $250,000 of protection. So what does this mean to you? If you have more than $250,000 at a single bank in a single type of ownership category, you may want to open some other accounts and kind of shift money around. You can either if you have all your money in one savings account, you could open savings accounts at other banks and kind of, just move so you have less than $250,000 per account, or you could move some money into a joint account with your spouse or significant other. If you live in a community property state, especially, but if you're going to be moving money from a single to a joint account, you may want to consult an attorney so you understand the legal implications of what you're doing with that money. So keep in mind that only non-interest bearing accounts are protected by FDIC insurance. So this is checking accounts, savings accounts, and CDs. So your annuities and life insurance policies and mutual funds and all that, they're not covered by FDIC insurance anyway. So this is just your basic checking, savings, CDs. You may or may not be affected by this, but again, if you have a bank account, you're probably going to get a notice and it's going to not really tell you anything. So I'm hoping that this will kind of help explain what's going on and the changes that are happening. So, in the end, it's all you have to do is kind of shift some money around if you have that much cash, in those types of accounts. So, let me know your questions. If you have any, definitely feel free to ask them in the comment section or shoot me an email. It's at the end of the video, or Alan, ALAN, @serenityfc.com. So that's all I have for today. Thanks so much for joining me.